Hannah Kessler.
This gal started her own bank at the age of 18, and then you became a self-made millionaire by the age of 24?
I did.
Hannah Kessler is a money mentor.
She's known as the single millionaire chick.
With advice on how to stop living paycheck to paycheck.
Money starts with your mindset.
How you think about your money is going to greatly impact how much money that you have.
I grew up in a town called Olathe, Kansas. I'd be walking out of the door, going to school, and my mama would holler at me, "Hannah, make good choices." And I'd have to holler back, "Because the choices I make today will affect my future."
My parents, they did a very good job about teaching me as a child how to handle my money. We have a lack of understanding when it comes to money.
If you want your kids to have money, you need to start talking to them about it while they're young.
I'm really second generation to this concept that's called the infinite banking concept.
And at 18 years old, my dad gave me the choice to start my own bank that then led me to becoming a millionaire by the time I was 24.
Now you've written a book to help tie it all together.
So the companion is really just teaching kids that, not specifically money, but really important life lessons.
Now being the owner of the Money Multiplier, I help serve over 17,000 clients in every state of the country.
Where can people get the book?
HannahKessler.com. Hannah spelled the same way forwards and backwards, Kessler with one S.
Also, I got my podcast show, the Money Multiplier Podcast.
And make good choices today, because the choices you make today will affect your future. Good morning, y'all. Hey, I know I'm a day late. Good to see you folks, Mr. Dexter and Dave. I see you guys in the comments here. So, little update. I got home very, very late on Wednesday evening. I laid my pretty head on my pillow. It was about 2 a.m. I just couldn't get my ass out of bed. All right. So that's why we're here on Friday instead of normally on Thursdays. All right. Hopefully that's okay with y'all. Well, good morning. I was at a conference this past week for one of our insurance companies, Security Mutual Life. Great company. I mean, honestly, great people. And actually their slogan, the company that cares. And honestly, you can feel it, right? I kind of to go back on our past 2 weeks of our topics of things that I've learned in business up to this point in my life. I really only want to work with people who they're doing it out of their hearts. They're doing it because they care. They're not just trying to chase dollar signs, chase making money and creating bigger pocketbooks, which is important. I mean, yeah, but it all just goes back to what my father has always taught me, which is a Zig Ziglar quote. If you help enough people get what they want, you in return will get what you want. So I just follow that quote every day of my life, in my business, even my personal life, even like around here in the condo. If I see somebody opening a door and they got a whole bunch of crap in their arms, I'm going to help them, right? Speaking of my condo, my community, I officially live in a retirement community. It is now validated. I mean, yeah, I live in Florida, okay? Let's be real. But they are hosting actually today a free lunch and learn about like a whole bunch of assisted living resources. And I was like, okay, it is official. I do live in a retirement community. But that's going on today. But then I messaged my office manager, Becky, and I said, Becky, how can I host an event like this? I will bring lunch for everybody. I'll teach them about asset-based long-term care. I'll teach them about the importance of whole life insurance, the importance of managing your money correctly. Becky, how can I do this? She hasn't emailed me back yet. We'll see. So good morning, y'all. So as I said, I was on the road this week. I was up in Philadelphia attending that conference with Security Mutual Life. And I took my best girlfriend, Sadie, with me as well. Sadie, she's on our application team. So a lot of y'all may know Sadie Murdoch. She lives down here in Florida with me. She's just in the next town north. Not the next town, about an hour north of me in a town called St. Augustine. And she actually lives there with another one of our money mentors, Mike Samet. Shout out Mike Samet. Him and I did a podcast episode not too long ago about long-term care and the importance of long-term care. So go and check that out, the Money Multiplier podcast. You can find it on all podcasting platforms and even YouTube. If you like to listen and watch on YouTube, go and check out that video I did with Mike. So Sadie and I were up there, and it was an event for underwriting. Okay. And I enjoyed this event because it really got me back to my roots of where I even started in this business. Long story short, I got into this business when I was 18. And at 18, I was still living in Kansas City. I was living downtown with my two girlfriends. We had a little duplex together. It's like a 3-bed, 3-bath duplex. And I was working part-time Cracker Barrel waitressing and part-time with Dad, because Dad called me up one day and he said, hey, I need some help in my business. And if you're not going to help me, I'm just going to go find someone else. And I was like, all right, Dad, well, what do you want me to do? And that's where I started off on the application team. And I think it was the best place of where I started here, because I really learned this business from the ground up. I understand how the underwriters are thinking. I understand products and product design, the different insurance companies. You know, a question I actually got asked yesterday when I was doing some of my strategy calls, they said, hey, you know, how do you have this knowledge, or how do you know what insurance company is best for me? Why are we going with this company, maybe not this company? And it really comes from experience, I would say. I mean, just how you heard in my intro video, I mean, we have over 17,000 clients in every state of the country. You know, Dad started implementing the infinite banking concept in 2008, and then became so passionate. He was referring a lot of his chiropractic mentees who he was coaching. They were starting up their own offices. And right, when you're going to start up your chiropractic office, you have overhead costs. You got to pay the employees. You have a payroll. You got to get all the equipment, the headrest paper, the adjustment tables, right? And so how are you financing for these purchases? And that's when Dad would just share what he was doing in his offices, using and leveraging his whole life policies to buy XYZ, pay taxes, whatever. And his old mentor said, Brent, you know, you seem to be very passionate about this. You should maybe go get licensed, and you should maybe start teaching this stuff as well. So that was in 2012. Then ever since 2012, here we are now in 2026. And I'm telling you, I ain't stopping. I love this business. It's a lot of fun. I'm truly helping people. But back then, you know, so Brent was just sharing a lot of the concept with people, and because we've just been doing it for a long time, I just know, you know, I know places of where to send my people. You know, I have the experience, went in, ran the illustrations, gone through the underwriting process. So if somebody comes to me and they're like, hey, I got an enlarged prostate, my PSA levels are this, you know, I know what company to take them to because of my experience of doing it. Same thing even with like policy design. You know, if somebody is doing a large dump in the first year of their policy, but maybe smaller ongoing premiums, there's some companies that cater better to that policy design than others. You see what I'm saying? So there's just kind of different quirks of why we take one person somewhere versus elsewhere. And I'm very open. I'll tell you what it is. But at the end of the day, I say this as well to like my people. I'm like, hey, you're in the driver's seat. You're going to tell me what you want anyways. But this is just my professional opinion. I would go here because of XYZ. You see what I'm saying? So Security Mutuals is one of the 6 companies that we do business with, and I do want to shout them out because, again, it's good people at that home office. They really care, and the whole event was just getting back into the underwriter's mind, and I can know exactly how they're thinking because, you got to think about it this way too. Whole life insurance or just insurance in general, I mean, it's a big place where a lot of these criminals will go and do some money laundering at. So insurance underwriters, they're always suspicious, okay? And it's our job as being that mentor to paint the picture for the underwriter. Why do we want this death benefit? How are they going to be paying those premiums? What are we going to be using this policy for? Okay. And that kind of gets perfect into my little segment of what I want to talk about of what I learned these past 2 days at the seminar, but then also kind of going back through history because a gentleman got up there on stage and he says, "Hey, do you know where life insurance even started? Where did it come from, or this concept of life insurance?" And in my mind, I was thinking, well, hey, talking with Jonah and Jeremiah Do, shout out the banking bros, go follow them. They have enlightened me that even back in the day, slave owners would own policies on their slaves. And I was thinking, okay, well, maybe it's like the 1700s, 1800s. Is that where life insurance came from? And that is true to our new country here, United States of America. But actually, life insurance started around the time of 100 BC. The concept of life insurance around 100 BC. And it started with the Romans, and the concept of life insurance was there because of the death protection, the burial expenses. Because at the end of the day, even our government and the IRS, Congress, they have not caught up to the living benefits of life insurance. I mean, yeah, people know. When I go and I travel around and I teach on this concept on stage, I actually have a slide up of, real scenarios of life insurance that people have been using the cash values out of. The University of Michigan, okay, they were using it to pay their head football coach. McDonald's, Ray Kroc had to float the salary of his key employees and even used his cash value in his policies to finance for the advertising campaign known as Ronald McDonald. Walt Disney, this is how Disney got started because the banks wouldn't loan Walt any money to start Disneyland, so he had to go and collaterally borrow money from his cash value life insurance policies. Stetson University, Foster Farm, J.C. Penney. I mean, even the Pampered Chef. Okay, Pampered Chef, they borrowed money. Doris Christopher, who started the Pampered Chef, she borrowed $3,000 from her life insurance policy to start the Pampered Chef. And now it's acquired by Warren Buffett and it's worth over $1.5 billion today. So, the Congress and the IRS just haven't really caught up to the living benefits. However, again, why I brought this up, Joe Biden has 6 whole life policies with the company that I personally do business with. Why does Joe Biden have all of these policies, right? So there is a, what's the right word? We need to get with the times, okay? IRS, Congress, we need to get with the times. Life insurance is just so much more. Whole life insurance is so much more than just the death benefit protection. Okay. And that's why, us over here at the Infinite Banking Concept, we understand that we're leveraging and using the cash values of those policies. But to kind of just bring it back to the importance of death benefits, I know I can do a better job of talking more and more about death benefit than what we do, but it's the inevitable. Okay. Hate to break it to y'all, but we all have a guaranteed expiration date on our body. And so there's a time where we're guaranteed going to pass away or graduate, is what I like to say. And so, in my opinion, life insurance is the only insurance that's actually guaranteed to happen. Okay. And that's why sometimes it just mind boggles me that we will be spending buku bucks on insurance, but then neglect the insurance that's actually guaranteed to happen. You got your flood insurance, your fire insurance, your car insurance. Yeah, I know some of this we legally have to have, right? You got pet insurance, you got renter's insurance. There's so many other insurances out there which are good, right? Health insurance. But it's not guaranteed to happen like it is with your life. We all have a guaranteed expiration date. So actually, one of the home office officials sent this over in an email about a week ago, and I'm going to share my screen here. This is a death receipt, okay? It's kind of like a made-up receipt, all right? You know what I'm saying? But it looks like it's a receipt when you go to the store and they, like if you go to Publix, they print you out the receipt. It looks like this, right? And what if, because this happens, hold on, let me take it back. About 2 weeks ago, after our Tampa event, somebody hits me up and they say, hey, Hannah, and their clients, they got 3 policies with me. They say, hey, just this past weekend, our business partner, they own 4 businesses and there's 4 owners of those businesses altogether, okay? And they hit me up and they say, Hannah, this past weekend, one of our business partners, the person who's in charge of all of the operations within our business, 38 years old, passed away this weekend. 38 years old. So, you know, you never know when your time's going to come. When Jesus calls you home or whoever you believe in, when your time is coming and you're going to graduate from this planet, you never know when that time is. And so now they're calling me up and they're like, crap, I did not realize the importance of key man coverage, buy, sell for my business. And we're going to get into that topic here in just a little bit. But this is why, yeah, we focus a lot on the cash values and the aspect of whole life insurance of how you can leverage the cash within those policies. But the death benefit is so important, because now what this gentleman has to do, one of my clients, they have to go into the store every day, because it's a open all day store from Sunday to Sunday, 9 to 6 o'clock. He has to be there working the counter because his business partner passed away. And if he would have had this death benefit on him, he would have had the resources to go and find himself another key executive or key employee for that replacement, because there's a loss of income now for the business, or even maybe not even loss of income, if you want to say. Now there's a loss of his time that he has to take away from being the executive and doing other things, because now he has to go work inside and work in the business rather than on the business. You see what I'm saying? So you just never know when that time is happening. And this screen here that I'm showing y'all, this is a death receipt for a parent, okay? What if this happened to you and your family? How old are you today? And number one, no, you're not too old to have life insurance on your body. I will say the cutoff date is around the age of 85, just FYI. Depending on companies, it could be age 80 up to 85, whole life insurance. But how old are you today? This one, 32 years old. She's a female, and she passed away in 2024. She still has an outstanding balance on her mortgage, $420,000. She's got children. There's college education that she still owes on, 55 grand. There's also funeral expenses, because y'all, burial costs and funeral expenses, they are expensive, okay? $15,000 just to bury you, or whatever you guys want to do, like when you go out. Credit cards, she owes $2,000 to her credit card. She still has a car loan of $15,000, and she only has $23,000 in savings. So when you add all of that up, the total is $484,000 that now she's burdening with her family, that money that they have to pay. This check is the inevitable. unless you have life insurance, that life insurance death benefit is going to pay out all of this outstanding debt. Because if you don't have it, now your family members are going to be responsible and your family members are going to have to pay for it, or they're going to have to go and liquidate a lot of your assets. You know, you got the house, the bank could take back the house. They could take back the car. Your children couldn't go to college maybe, or maybe they got to go get their own student loans. So what I'm saying is that all of this financing that we do it within our life is the inevitable, but also is the debt that we leave behind to our family by financing these transactions. I mean, to take it back to like our Nelson Nash, right? Nelson would always say, if I can solve your need for financing cash while you're living, you will have enough death benefit to leave to your family and heirs. And it's true, because even for myself, I don't walk into my policies thinking about the death benefit. I walk into my policies thinking about, okay, how much premium, how much cash can I get into this policy for myself? How much more money can I push through as policy premiums instead of just leaving it stagnant down at the local bank? Because reminder, the only differences, in my humble opinion, between a commercial bank and a life insurance company is just the name on the front door. I mean, they're both places of where you can store your wealth and your money at. And the biggest difference is that I'm guaranteed to die again. And so when that time happens, not an if, but when, I have that death benefit that's going to be on that policy. And now that's going to get paid out to my family. So I'm not burdening them with this almost $500,000, $500,000 that they now have to pay for all of my debts that I have. You see what I'm saying? So I just kind of want to come back to like the importance of life insurance and why it is so important that you have it. So on the last little highlighted, it says, there's an easy way to solve the problem. Right now, it's life insurance. So I know the life insurance world kind of gets a bad rep because there's, you know, the other insurances, like, you know, not too long ago with the whole health world and United Healthcare, you know, you saw those big headlines about, what was that now, like a year ago or so? I know the insurance world can get a bad rep, but I think that when you're working with somebody who's actively doing this in their own life and they can kind of bring you in on insights, it's powerful. But at the end of the day, you know, you're in control of the contract, right? You, the policy owner, you hold 100% control and rights to that policy. So really, the only person who can screw this stuff up is you and how you use your policy. If you're not disciplined with your cash flow. Okay, this was something else I was thinking about that I want to talk about today is your cash flow. And hold on, I want to sip my coffee. But your cash flow, okay, totally excluding the policies out of it. And when I say policies, I'm talking specifically about whole life insurance. Yes, can term make sense? Absolutely. Term can make sense. There's even products called convertible term. You can convert the term into whole life, design it for banking. No, I do not recommend IULs, index universal lives. I can at some point. I got a lot of content on my YouTube channel where I get into the depths of IULs. But one of these days I will do a live stream talking about IULs as well. But I would never personally buy an IUL, thus I would never sell one or recommend one, and there's reasons as to why, but I'm talking specifically about whole life insurance, and whole life is the only vehicle that you can use for the infinite banking concept. I won't get into why right now. Go to my YouTube channels and I'll do, again, another segment on it later. But people will come to me and they're like, Hannah, this stuff is so cool. I want to recapture the money that I'm already spending. I want to keep my money inside of this tax-free environment. Government's out of my hair. It's not tied to the markets when it goes up or goes down. That doesn't matter to me. I have a guaranteed interest rate that this insurance company has to pay me, right? And so people will come to me and they'll think that infinite banking is going to solve all their problems. But then once we start to get into their cash flow of, all right, how much are you making? What is your income that you're bringing in? What are your expenses that are going out the door? Where are you currently saving your money at right now? Where are you storing it? Do you have a 401k? Do you have a 437B if you're a government employee or a teacher? Do you have IRAs, self-directed accounts? Do you have a brokerage account with Charles Schwab and that's where you're keeping the money at? Look at all of the hubs of where you're keeping your money, and then also look at your cash flow situation. A lot of y'all don't do this. You guys are just flying through a black box. My dad makes the joke. He says, some people, they will still have checks left on the counter and they still think they have money in the bank. All right. You need to get in tune with what you're doing with your cash flow. So totally excluding the policies out of it, that is the number one place to start. Now, given I track my cash flow, I have an Excel sheet. I call it my net worth sheet because that's where I keep all of my assets. I track my net worth, the money in my bank accounts, my policies. That's how I track policy loans. Again, I did a YouTube video on that. Maybe I'll link it here in just a little bit. But I have my Excel sheet that I look at every single month. And I block out the first Wednesday of the month from 9 to 12. Don't call me. I ain't answering because I'm updating my spreadsheet here. Okay. You just got to stay disciplined with it because no one's going to care more about your financial life than what you do. So it's time to start caring. But, and also another resource too, Rocket Money. I still use Rocket Money. Okay. I like Rocket Money. I like just everything at my fingertips. If I don't want to go in manually, like right now, and maybe my money's kind of causing me like a little bit of stress. Maybe I got a lot of dollars going out and I'm feeling a little bit anxious. I'll go to my Rocket Money app because it automatically tracks everything and I'll see, okay, calm it again. We know what's going on. But Rocket Money is a great app as well. Shout out. So people will not know what they're doing with their cash flow. And then they'll say, hey, I want to do this policy. And then I'll help them get into their cash flow. And I'm like, dude, you're in the negatives every single month, or you're just breaking even every month. And then we'll even get deeper into it, like with their expenses. Why are you spending all of this money to this place and this place and this place? What are you doing right now? And sometimes people just lack the self-control, or they just don't even know that they're spending all of that money. Even my niece Tori, I made Tori go and get Rocket Money. She's about to be 17 years old in May. And she's like, holy crap, I had no idea how much money I was spending at Starbucks every single month, right? You don't understand it, but then once it starts to rack up, $5 here, $10 here, a $50 payment over here, it starts to rack up, right? So it's just important to stay in tune with your cash flow and know what's going on, because if you know what's going on, you'll know what to do. So totally excluding whole life and the infinite banking concept out of it, you need to understand your cash flow, track what's happening every month. And then what I tell y'all is the monies that you're keeping at the end of the month, that's the dollars that should start flowing towards your policy as the ongoing premium deposits. So example I always use just because it's easy math. Let's say I'm profiting $10,000 a month and my expenses are $8,000 a month. Well, don't just leave that leftover $2,000 down at the local bank. Start by taking that money that you're keeping, and that's the dollars that should start flowing towards your policy. And always, right? I mean, you decide the premium that you want to do into your policy. If you're working with somebody that they're telling you, hey, you got to have minimum $10,000 a year to start this policy, go the other direction. My opinion. You decide the premium that you want to do inside of your policy. ADD, sorry, but like I even just yesterday too, it was another conversation I was having with a son. His dad is a client of mine, and his son, he's only 29 years old. He's got 3 kiddos, his wife, he's a state trooper. He's pretty cool. Even himself, he says, hey, I have a whole life policy and I'm putting money in here, but the guy told me I had to do a minimum of $3,000 a year into this policy. And I'm like, no, there's no minimum to what you got to do. And he didn't even know that you could pay monthly or quarterly or even twice a year premiums. You don't have to do annually. When I started doing monthly premiums because that just worked out best for my cash flow at the time. Now I'm up to the point where I pay it annually every year, right? So my biggest advice, even if you don't come to us at the Money Multiplier to start this whole journey with, one, work with somebody who is a certified infinite banking practitioner would be my first advice. My second advice, if they're telling you how much money to put inside of your policy, run the other direction, go find somebody else to work with. Hey, I'm always here, just FYI, I ain't going anywhere. You can always call me. Anyways, and then number three, if you are going to start this journey, you should work with somebody who's going to be there for the long haul for you and not just going to do yearly meetings with you. Okay. I mean, that's why our implementation team, they're checking in on all of our people every quarter for the life of the policy. Even if you don't need us, you're going to hear from us. Hey, how are things going? Are there any changes? You got big upcoming purchases that you're making? Do you how much is your tax bill this year? Or are you getting a tax refund check? Are there additions to the family? Do we have subtractions to the family, right? And when you just stay up to date with what's going on in your life and how you're financing for things, you'll know how to use your policy, number one, but then also you'll be smarter in how you're transactioning this business within your life. You see what I'm saying? I don't know. Or am I just rambling? Do you get what I'm saying? All right. So yeah, that was one thing that I learned, that life insurance started in 100 BC and it was meant for death protection. So to get into the underwriter's mind, that's why they're always looking at the policies from a death benefit perspective. Because at the end of the day, that's what they're on the hook for, right? I mean, they are also on the hook for paying out the guaranteed interest, but they're on the hook for that death benefit that they are promising to your family at the time of your passing. So they're looking at you, who you are, what's your social history like? Are you a drinker? Are you a smoker? Do you smoke marijuana? Do you scuba dive? Are you a pilot? Do you have risky activities like what's that, like cliff diving or base jumping? One of my girlfriends, her ex-boyfriend would love to go base jumping. I'm like, never, can never be me. Even skydiving, ain't me. Even like roller coasters. I love my roller coasters, right? But where I draw the line is, at the water parks, they have like the steep down slides. Can't be me. Or like the slides where the floor drops out from under you. Nope, I'll pass. I'll wait for you down at the end of the slide. Thank you very much. But like they'll look at who you are as a person, your social history. Do you have any risky hobbies or activities that you're doing? They look at your health, obviously. They'll look at your doctor records. They'll even maybe have you go and complete an exam for the insurance company. Well, the nurse will come out to your house. They'll take a little blood. You'll pee in a cup, stand on a scale. That will all go to your underwriter. They will look at your income, okay, your net worth. How are you going to financially afford this policy? What is the value of you and your life? Think about it in the same perspective of car insurance, okay? Just how you can't overinsure a car, you can't overinsure a body. You can't go get Ferrari insurance on a 2003 Honda Civic, right? Same thing in the life insurance world. However, as time goes on and hopefully we're making more income, our assets are rising, income is rising, that we can qualify for more and more death benefit as time goes on. So, that's how I continue to stack my death benefit. Okay, to bring it full circle, as Nelson says, if I can solve your need for finance and cash, you'll have enough death benefit to leave to your family and heirs. As I continue to stack my policies, because I have multiple policies on my body. And as I continue to grow my portfolio, if you will, or where I'm storing my money at, that death benefit will start to stack on top of each other. And two, a lot of people don't know this, but a whole life policy with a mutually owned insurance company, when we get paid out those dividends, or we pay extra paid up addition premium into our policies, the death benefit will actually keep increasing every year. So every year when the cash value increases, the death benefit also increases. So there's a lot of other uses just besides the personal side of how you can implement these policies. I know we talk a lot about, financing it for car purchases, college education, weddings, houses, fun toys like boats, or did I say vacations already? We talk a lot about the personal side, but even like the estate planning side, this is another reason why a lot of wealthy people and wealthy families will do a lot of premium inside of their policies for the death benefit protection, because they want to transfer their wealth tax-free to the next generation in line. Okay, because if you don't set this stuff up properly, there's inheritance tax, there is probate court that you may have to go through. There's going to be attorney fees. There's going to be judges. There's a lot. If you don't actively prep for this in the estate planning realm, the government and the state and other people are going to want to come in and start to eat away at the wealth and this empire that you built through your life because you failed to do the planning. And it's not because, you kind of failed to do the planning, but also it's not like common knowledge. A lot of people aren't talking about this stuff. And a lot of a big misconception is that you have to have a lot of money for this to even make sense to do my estate planning. No, okay, you don't. Are you kidding me? It's important for everybody to plan. Okay, another quote from Brent Kessler: "A failure to plan is a plan to fail." You like that one? That one's a good one, right, Dexter? So a failure to plan is a plan to fail. You got to plan for these times because, again, it's the inevitable. So, all right. I put a little note here for myself too. I said, get educated on estate and inheritance tax. I need to deepen my knowledge there on that. Also, like even just for myself, because I have my own trust and foundation I have established too. Let's actually skip over it. We'll come back to the business planning, but charitable giving. Y'all, did you know that you could have a policy that you literally just use to donate the cash values every year? Why do I do it out of my policies? Because remember, I have a foundation. I have one policy where my foundation owns it. I pay the premiums. It's on my body, and the beneficiary is a charity. I use the policy I pay my premiums, right? And the whole idea is of why I pay those premiums into the policy is that every year, because of the uninterrupted compounding, that cash growth will become greater and greater each and every year. And so I get to that point where I'm pulling out more from this policy than what I even put into it. But then I use that money and I go donate to various 501c3s. So did you know that a charity can literally own that policy on you? This charity can also be named as the beneficiary. That's a big thing. That's another thing I get asked a lot. Well, Hannah, I don't have any family. I'm not married. I have no children. The only people that are really in my life is my sister and my niece and nephew. I don't really care too much about them to leave them all that death benefit. Okay. Well, is there a charitable organization? Is there somebody else that you want to leave this money to? And seriously, like whole life insurance is literally the only vehicle on this planet, unless y'all know of something that I don't know, but it's the only vehicle on this planet that's totally tax exempt. Seriously, the growth of the policy is tax-free. When I take out that money, it's tax-free in the form of a loan. Loans are always tax-free anyways, but even in the point of if I want to start taking withdrawals from that policy, tax-free up to my cost basis. We can get into that later. The death benefit is always going to be tax-free. So, and I say always, okay, yeah, we could get into like MEC status, MEC, the modified endowment contract. We'll save that conversation for another time. Go to my YouTube channels, go search that stuff up. But seriously, even for your time money, like I know a lot of people are tying a lot of their money every single month. And so how about instead of me just giving that money directly over to this church or this organization. How about I run the money through the policy and then I'll take it out and then I'll go make my donation? I mean, again, this is kind of why I titled this episode The Infinite Uses of IBC / whole life insurance, because if it makes sense, you can literally use this policy, put the policy on anybody that you truly want, as long as you have that insurable interest. I put a little star there. We can talk about that later too. But you can put that policy on anybody that you want, and then you can use the cash values from that policy to go do whatever you want. Because again, you're in control of the contract. You being that policy owner, you have first rights to what happens with that policy. Cash value is always going to get made payable to you first. And again, that's why these insurance companies will never deny you access to your money and your cash value. So anyways, think about charitable planning. I mean, seriously, your church or your charity, maybe they want to pay the policy on you. Right now, actually, what I'm trying to work on, but I've been kind of beefing with Becky downstairs a little bit. I'm having the same issue. My condo will not allow me to park my van downstairs. Again, it's a retirement community, okay? These old folks, I almost said old farts. These old folks sometimes seem like they have nothing else better to do besides bitch and complain, let me tell you. So they kind of get a little angry with me when I park my van down there, because it is 20 feet long. You know what their gripe is? I have this little adventure pack on the back side of my van. And with the adventure pack on the back of it, it's almost like a garage, like storage unit, if you will. It makes it 22 feet. They don't like that extra 2 feet. So now they're griping and they're telling me I can't park my van downstairs. I'm like, oh, with the amount of money I pay in HOA fees, you would think I could. So my van gets stored at mom and dad's hangar, about 15 minutes away from here. But I was even thinking, Becky, who owns this condo? Why don't, because hear me out. Actually, my condo association is pretty cool in the aspect of they are being their own bankers, but they're just using it out of a high yield savings account. So all of the money that we pay in as HOA fees, or maybe other, what's the right word? Monies that they get in from raising money, or maybe they're doing like a little event or whatever, right? All that money that comes in goes into that high yield savings account. And then every year we pay cash for the insurance on the building. And so we'll pay cash to the insurance company. And then every month we will pay back that high yield savings account. So I'm like, Becky, you're already doing this anyways. You are already being your own banker. You're just doing it in a place that could be better if you use the policy. Because Becky, you run everything around here. You are a key employee. You are truly the operations manager around here. If something were to happen to you, Becky, the people here are going to need a replacement. Who's going to keep us all organized? Who's going to keep all of our ducks in a row? You know what I mean? And I'm like, why don't you or one of the owners of this condo have a policy on your body? Then you start redirecting those payments, because I'm assuming like an LLC owns the condo, I mean, it's probably not just held like in a personal name. Have the business own the policy, put it on the key employees or the owners, have the death benefit be on them. And then now you just use the cash values from the policy to go pay the annual insurance bill. I'm working on it, but that's my idea. I've just been kind of beefing with Becky because she's mad at me because I keep parking my van downstairs. I'm sorry. I'm just a girl trying to live my best life. So that kind of gets us into like business planning. Okay, and I got to keep my eye on the times. I got a call here at the top of the hour. But business planning, this is very, very important. Let's say that you are in business, you have a business partner. Let's just keep it easy. You guys have 50-50 ownership within this business. And let's say that the business is evaluated at $1 million, just keeping it easy. You have Susie and Jim. Those are our names. Susie and Jim. Susie and Jim own 50-50 ownership within this $1 million business. If Susie were to pass, now Jim is going to be in business with Susie's children or Susie's husband. Doesn't matter. It's just whoever now is going to own that part of her business because it's her equity, it's her asset that she owns, right? Well, Jim can buy a policy on Susie, and Susie can buy a policy on Jim. They can each have $500,000 of death benefit on each of them because it's 50-50 ownership. Business is worth $1 million. So 500 on Susie, 500 on Jim. So in the event that Susie were to pass, then Jim can take that death benefit money and buy out Susie's family because Jim may not want to be in business with Susie's family or Susie's spouse or Susie's children, right? So that's well, without getting so deep into the weeds, that's one way of a business use of how you can use the policy. Your key employees, kind of like how I said, I mean, hey, what we do over here at the Money Multiplier, my team, if they are with me for 1.5 years or longer, instead of offering them 401ks or other qualified accounts, we will match them into their policy. I'm going to pick on Sadie again. Sadie is on the application team. And let's say Sadie wants to put $200 a month into that policy. Okay, $200 a month you're putting towards that policy. I'll match you, Sadie. I'll match you 100%. I'll put in $200 towards your policy as well. And how we do it is just every month we write another $200 on Sadie's check when she gets paid. And in this scenario, Sadie owns her policy. She's responsible for paying the premiums, and then she can list whoever she wants as that beneficiary. Probably her new husband, Jim. She'll list as a beneficiary. And so now this is a employee plan that we can give to our people to then start building up the cash values, because in the future, you can use the policy for retirement income. I mean, this is my retirement strategy. I'm going to take out tax-free income through my policies when that time happens. So she's able to use it to finance purchases. This is her retirement. She's building up the cash in there. And like I said, it's not like a 401k where kind of the money's locked up, right? Or you have to go ask permission, or there's a limit to how much you can take out, right? Or there's a guaranteed payback schedule that you have to pay back to that 401k. There's nothing like that here. You're in control of the contract. Insurance companies never going to ask you what you're using the cash value for, when you're going to pay it back, how you're going to pay it back. They don't care. Cash value is nothing more than a prepayment of your death benefit, and you're guaranteed to pass away or die. All right. So any outstanding loans at the time of your passing will just get subtracted from that death benefit. That's why they don't care. So in my opinion, it's just better to have those sort of plans rather than like going the traditional route where I'm limited to stuff. If you kind of heard me on my last podcast episode, it's titled, How Does Your Policy Build Cash Value? So it kind of gets into the weeds of the mechanics behind becoming your own banker, yes, but also the mechanics behind whole life and how we're structuring it to have that immediate cash value. But like, I was kind of going on a little rant because, again, I have ADD, severe ADD, and I'm just so sick and tired of what's going on within our world, within our government, having limitations to what I can do. And when you break it down to the fundamentals of whole life insurance and this concept of becoming your own banker, you have freedom, you have control, and you have liquidity. I can do what I want, when I want, for whatever reasons that I want. And that's truly, I mean, I think what we're all after is just having the freedom over our lives. So business uses are very important. That's how we personally do it over here with our key employees. And two, if you don't want to give your employee all of that control over the contract, you can own the policy. The business can own the policy. It'll be on their body. So like Money Multiplier can own a policy on Sadie. Sadie's the insured person. And then we can list ourselves as the beneficiary, or maybe I'm nice enough and I say, Sadie, I'll split the beneficiary with you, 50%, whoever you want to name, and we're going to take 50%. You could even design it that way and then incentivize them. I mean, that's what Dad would do in the chiropractic days is he would own the policy on the associate doc, and then he would list himself as the beneficiary. And he made this agreement with them saying, hey, doc, if you stay with me for 20 years or longer, I'm going to pay you out a guaranteed income stream of $5,000 a month. Again, whatever you choose. And how he's doing that is Brent would use the cash values to finance and keep the business running, pay payroll, whatever. But then when the time came and Dad would create loyalty with that doc, now he will just take the cash values out of that policy and then pay the doc that guaranteed income stream. Okay, you get to make the rules. Kind of goes back to one of Nelson's chapters, the golden rule. The one who has the gold makes the rules, right? So there's infinite uses of infinite ways that you can be designing these policies, how you can be using it. So there's kind of a reason Nelson would call this the infinite banking concept. And I don't know, I would just say, talk with somebody. Don't try to go out and do this all by yourself. Just talk with somebody. There are professionals in this world. It's almost like, if I have a heart condition or heart issue, am I going to go to my general practitioner, or am I going to go to the cardiologist who specializes in the heart? I'm going to go to the cardiologist, right? And that's how I feel about the infinite banking concept. I'm not just going to go to a regular traditional State Farm agent to help me do this. No, I'm going to go to the specialist. I'm going to go to that cardiologist that's within that space. So that's why I'm giving you all the resource of go look it up. There's a practitioner's finder on infinitebanking.org. You can see the practitioners listed there. I'm here. Hey, I would love to work with y'all. Love to talk with y'all. I don't talk about anything else besides banking and my kitty cats. But you can send me an email. My email's posted up right there, hannah@themoneymultiplier.com. Last thing I'm going to say, I got 4 minutes here before I really got to go, is even if you think you're uninsurable, talk with somebody too. There's always ways of how you can get approved, or that you can even utilize these policies within your life. You can own the policy on somebody else, still implement becoming your own banker. You can always even update the health rating on your policies. I mean, sometimes people get discouraged because they're like, crap, I got a standard rating. I really wanted this preferred, and I feel like I can get this preferred. You can always go back and request for that rate change or the health status to be changed, okay? I was a terrible teenager. I would smoke cigarettes. I don't smoke cigarettes anymore. But when I was smoking cigarettes, or when I stopped smoking the cigarettes, then I just went back to the insurance companies. I submitted that rate change application, and then the underwriters updated all of my policies to non-tobacco ratings. So you can always do that. Even like the importance of convertible term, to kind of bring it full circle back to our image here. Death benefit is important. You never know when it's your time to go home. So even if you feel like you may be thinking to yourself, Hannah, I don't even have like an extra $100 every month, but I do understand this death benefit is important. Yeah, maybe I'm saving $20 each and every month. That's why we like term. Term is cheap. We like that about the term, but no, it's just like renting the death benefit. It doesn't build us up cash value, and the term is going to expire at some point. But when you get a convertible term, when things are looking better, you can actually lock in that death benefit, your insurability, and then convert the term into whole life, and then design it for the infinite banking concept. So that's really all my thoughts. I do got to start heading out here. Let me see some of these comments that are coming in. I know Instagram, I kind of leave you guys out because you guys aren't in my main chat. Eddie Austin, good to see you, my man. All right, and then over here. Good. All right. I'm just seeing if there's any specific questions for me. So, hey, please, I'm going to be back Thursday, 9 a.m. Eastern time on our regular scheduled programming. If you can't catch these lives, the recordings will always be posted up on my YouTube channels, Hannah Kessler or The Money Multiplier. Or if you're a podcast listener, just go research Money Mornings with Hannah. You can go and find the podcast episode there. But come back if you got questions, or even if you want to ask me privately your questions, and maybe I want to bring it to the forefront anonymously. That's how you say that. I'm here. I think asking the questions and hearing people's stories about what they're doing can just be very, very impactful. So I'm done for today. Thank you, y'all, for being here. Happy Friday, my loves. Do well, be good. Don't do anything I wouldn't do, okay? I see you, Dexter. I see you, Shane. Don't be doing anything I wouldn't do, all right? Until next week, I'll catch y'all then. And enjoy your weekends, everyone.